Hello, how you doing today? I'm doing pretty good. Today I want to talk to you about an equity accelerator, or how to accelerate the equity position in your piece of real estate or your home that you may have a mortgage on. As we all talk about, owning real estate is typically considered the best investment that you can make in the world for yourself. And we always kind of think of that as an asset, which is true. All that's true. But there's also a liability that comes along with that if you have a mortgage. And so if you have a mortgage or loan against it, it's that note or that mortgage that's the liability. So I want to spend some time with you today to talk to you about how to accelerate your equity position or pay down those notes quicker. And as I was paying my own mortgage today in my house, I felt the urge to do this video for you. So let's dive into that and what it means for me and my family anyway. So here is, I crossed out some stuff that isn't pertinent to you guys, but you can see that this is due in June 2023, and I highlighted what my principal part of my payment is, $528.25. That's how much of that $1,400 is going towards the principal. The rest is going towards insurance, taxes, and the interest to the note holder. So anyway, if I just make the minimum payment of $1,401.38, only $528.25 actually goes to paying down my note, which can be disheartening at times. And on a 30-year loan, I always kind of talk about the importance of getting a 30-year loan versus anything less, because it gives you the least monthly payment of all the loan types, unless you do considerable percent down. That can change a little bit, but if you just do say 5% down or 20% down on your note at the beginning, that 30 year is going to give you a lesser monthly payment than say a 20 or 15-year note, because of the extended time. I also will coach a lot of our buyers to do that 30-year, because you never know when an accident's going to happen or an emergency, when you need to free up some capital and send it towards that said emergency, or a lot of times it's a medical something or another that is going to hinder you for a short period of time. But if you don't have that, and if you purchase within your means, you can accelerate your 30-year loan and get it paid down quicker. Now back to this example, I got $528 going towards principal. So I'm going to show you my payment coupon for this month. So there's my $1,401 payment, regular payment. Now here on my coupon, and I encourage buyers or homeowners or real estate owners to not do automatic payments, but to still continue to use the coupons and write checks, because of this right here. I can manipulate every month how much extra principal I'm paying towards my note. Now as you can see, I'm pretty well matching what my principal payment is. So here, my principal payment's $528. I want to accelerate my payment and get my note paid down quicker, so I'm adding an additional $598.65, totaling a $2,000 payment. That's for my May 2023 payment. And I'm accelerating that in an effort to not be paying on this property for 30 years, to not lose interest to my note holder. Now, granted, my note holder has provided me an opportunity to buy this property, live in this property, and enjoy it. But at the same time, because of how loan amortizations work, I'm okay paying him some money, or note holder back some money, because I'm using their capital for my gain. But I'm going to try to beat them as much as I can at the same time and not pay them what they originally expected over the course of 30 years. So with that said, if I just stick to my $598 Excelled payment on top of my $1,400 payment, and kept my payments at $2,000, in this example, I would have a total of 200 payments. If I bought this property today, based on the terms that I've received in this note, I'd have 200 payments instead of 360. On a 30-year loan, there's 360 payments that you're obligated yourself to. If I just stick to the $598 loan accelerator payment in addition to my regular payment, I would cut that down to 200 months. So I've shaved off 160 months. That would give me an interest savings of $54,252. So over the course of 17 and 2/3 years, I've just saved $54,252. That's paying myself back because me and my wife have committed to the loan acceleration in this particular loan or note. We're basically saving ourselves $54,000, which in tune is, you can call that a loan savings or interest savings, or we look at it as an asset, because we work hard for our money, and we're self-employed, and so every penny we save means something to us, and it should for everybody, whether you're working for somebody else and you're on a fixed income, or you're self-employed, or whatever. Any money that you can save yourself is money earned. So in this, because we're committing ourselves to the additional payment every month, this is $54,000 earned that we're not paying somebody else. In this example, our note holder. Now, contrary, if we wanted to pay this off in 15 years, we would have to have a loan acceleration of $747. Okay, so here we're using $598, almost $600. If I wanted my 30-year to turn into a 15-year loan payoff, we would have to do a loan acceleration. We'll just call it $750, of which would save us $61,108. So as you can see, the more money you can apply to the extra principal portion of your payment every month, the quicker you're going to pay down your loan. And of course, long-term savings, this benefits you forever and ever, and transfers on to the next generation and the next generation. You can teach them to do the same thing. And of course, if you pass away and you gift your property to your kids or other family or other friends, and there's no loan or note against it, now all of a sudden they're just that much more positive in the asset column. Their balance sheet is that much stronger. Your balance sheet's that much stronger. I've sat at a lot of closings, and I've heard lenders talk about making 13 payments in 12 months. Great idea, same philosophy. This is to cut your your 30-year loan down in this example. When you do 13 payments in 12 months, that will bring you down between 22 and 23 years of total debt payoff. So you've saved yourself 7 to 8 years worth of payments. Great philosophy. I don't disregard it whatsoever, and if that's all you can do, that's all you can do. Obviously, my family's challenged ourselves to a much higher rate here and a much quicker payoff, so that's what we do. But all of you should have this conversation with yourselves, with your family members, your spouse. Explain why you want to do this or why you should do this, because in the end, as long as that note is still active, you have a liability against your real estate, and it's not a total asset until that note is completely gone. And I've worked for families that don't have loans against their real estate. They're blue collar people. They were medium income earners at best. But because of their dedication and their commitment to satisfying their loan obligations quicker, they put themselves in a much better position years later. And it's really gratifying to listen to them and their stories, how they got there, why they got there, and what it meant for them after they got there. So just want to challenge you on that equity accelerator thought process a little bit. I know other investment gurus are going to talk to you about stocks and bonds and 401ks and IRAs and life insurance and blah, blah, blah. All good tools if they fit the toolbox for you. This is another tool in the real estate realm that you should at least consider before considering those other tools, because it may just mean something bigger for you in the future that nobody's making you aware of or you hadn't thought of. And I guarantee you they don't teach this stuff in school, right? So, yeah. Keep that in mind. If you got questions, we can sit down with you and do a consultation, run the calculations and see what it means to you. It doesn't have to start from the beginning. We can, if you're 5 years into your note and your mortgage, we can pick up there and start figuring out what it means for you from that point forward. So yeah, glad to do that with you. And if you like what we have to say, stay in tune, wait for the next video, and we got some more properties coming up for sale. So yeah, toot the horn, hit the notifications, share with your friends, do whatever you got to do to stay in touch. Thanks, and make it a great day.